Well, indeed, thank you very much, and a very good afternoon to you too, Sarah. Yes, today we're looking at KCB results, and just to run you through the numbers and what we've been able to get from these full year results for 2019, we get to understand that KCB made a pre-tax profit of about 7.5% to 36.73 billion, and a post-tax profit that is about 4.9, which is basically 5%, to about 25.2 billion shillings. And Joshua, thank you so much for speaking to us and for joining us for this interview. And now, the number one thing that we want to understand, you recently acquired and finalized the NBK acquisition.
Correct.
And this is a bank that has been making losses of about 302.3 million shillings. How do you intend to turn this around?
So one of the issues, and I'm happy that we got NBK, and their greatest challenges was largely about the loans that they had in their books. So by putting in a new team, we also have recapitalized NBK. Last year, we have put in 5 billion shillings to improve the size of their balance sheet, the size to increase their loans that they can offer, and also recover some of the loans that we are facing at NBK. So I would say it's actually not a bad bank from what we found in terms of our own investment. So we are looking at the last quarter, NBK's profits were more than 1 billion shillings for one quarter alone. If you run at that rate, NBK can easily make 3 to 4 billion shillings a year for the year 2020.
In terms of competitiveness and in terms of the offering to the customer, what does this tier one, having more tier one banks, what does it say about the customer? What does the customer stand to gain?
Let me say that we do not worry about building stronger banks. That is not a concern we have. What is important is for us to be the best in customer experience. Correct? So we monitor something like the customer satisfaction, we monitor something like the Net Promoter Score, we monitor something called the customer effort to serve. And we have the highest rating today internationally for Kenya market at least, and the banking sector at an NPS score of 43%.
And it's a key thing that you mentioned, the issue of customer centricity, because the CBK and also the banking charter has been very keen on this issue.
What really matters, let me say, is how you treat your customers. Are they find your service friendly, easy? Are they dignified? And are you transparent? It doesn't matter how much results you will ever make. If the customers don't vote with yourself in terms of your services, and the tier one banks generally are pushing towards improving the level of customer service in line with the banking sector charter that was issued by the central bank last year.
All right, let's talk about mobile loans. And now that the cap has been repealed, we had seen a lot of banks moving towards looking for these digital and mobile platforms to issue credit. Going forward, are we still going to see a lot of contribution from mobile loans that are being issued by banks?
I think this is a new innovation for Kenya for sure. We will see, I would say, a 30, 40, or a 40 to 50% growth in mobile loans, because the kind of customers who we are lending to today, they are borrowing 5,000, 6,000, or even 7,000. That is not traditionally what banks lend. Banks are very good in lending 50,000, 100,000. So because of what you call the loan per capita, which is very small, I think we've democratized access to lending with mobile loans. The challenge with mobile loans is that there are a lot of people providing the same loans, use what you call digital lenders in this system, and many of them are not regulated by the Central Bank of Kenya. So the prices may be quite high. That is the complaint we see. That may overall affect the growth in a mobile lending, because customers will be priced very high and they won't be able to pay their loans.
All right. Now, again, like whenever we talk about loans, there's also the issue of NPLs.
Correct.
And this has been quite a thorn in the flesh of many banks. And for KCB, from where you sit, in terms of recovery, how much would you say you have recovered in 2019, and let's say even talk for 2020, and especially with institutional borrowers?
For institutional borrowers, I would say our risk is not something that is out of the industry context. If you think about KCB, our NPL is at 7.8%. If you think about NBK, NPL is at 45%. Combined, it is 10.9%. The industry, which is the Kenyan banking sector, NPL is at 12%. So last year we recovered in excess of 11 billion shillings of institutional customers. But I would say it's a longer process. It's not a very straightforward process. You can say that tomorrow I can recover. Are we confident? Yes.
It's been a couple of months since the cap was repealed. Do we expect more credit to the SME sector and to the general economy?
So for us, we expect credit to grow by 15% overall on a year-on-year basis. what is taking much time is that a customer-based pricing, which is what you call risk-based pricing. Have we introduced that? Yes, we have introduced that. What the new charter says, which is what we are working with, is customers need to know their credit score, which is very important for once. Many customers don't know their credit score. 2, we need our banking sector charter and a pricing model agreed with the central bank, which is what we are working with right now. Once that is approved, because remember, beyond transparency of the risk-based pricing, there is also what the central bank calls ethical lending. Yeah? Is the customer able to afford the facility that you are providing? So I will say that this year, by June, remember we had a 1-year program from last year September to this year September. We should be able to say if you walk to a bank today and you're a customer of a good standing, so you're a grade 1, you have got a very good price. If you're a customer with a bad standing, you're a grade 9, where 9 is the lowest, you got the most expensive price. But many customers generally are in the middle, correct? Which is like a 3 and 4. And that, they should get the price that we're always saying is our best rate in the market.
All right, and maybe in another setup, we'll try and sit down and just look at the metrics that banks will be using to sort of price credit based on risk. But thank you so much for taking the time to speak to us. And Sarah, we'll be giving you more details in our subsequent bulletin, and also just interrogating these results further to be able to update our viewers in our subsequent bulletin. But for now, back to you.